walked in the studio and told me something so exciting. And I'm looking forward to it. So you guys do not want to miss out on tomorrow. I know I'm already not done with today, but I'm talking about tomorrow. But yeah, I'm trying to prepare you. I respect you that much. Okay, let's get into this conversation. So we're looking at the housing market. The repo rate cut, it has pushed the prime lending rate to 10.25%, which is at its lowest point in 2 years. You're probably wondering, what does this mean? How does this pertain to me and my home? Does it mean my home is secure? Let's get the answers to this. We are joined by Colin Strumpher, who is the regional manager of BetterBond. Colin, good afternoon.
Hi, good afternoon, and thank you for the time.
Thank you so much for joining us. So let's talk about this. I mean, what does the 25 basis points a cut mean for homeowners in rand terms?
Yeah, so in real rand terms, on a home loan of say around R1 million, you're not looking at a big massive change in your disposable income suddenly. It's probably about 160, 170 rand difference, on around R1 million. So double that for 2 million, and obviously as we go up in the millions. I think the reality is though that this has been a long time coming, and it has taken a long time to get us to this point from where we were a year ago. The change is more dramatic. That's more like a 700 rand change on a million rand bond. So 1,400, 1,500 rand on 2 million rand, just as an example. So the quarter percent is great. It doesn't make a magnificent impact right now, but it's all those quarter percents in the last year and a half that has made a significant difference, including obviously optimism and sentiment. Clients feel very optimistic about, the property market again.
And do you think this contributes to, home security slash insecurity? I mean, when you're seeing so many changes being made on national platform, I think one can't help but think, are we going to maintain our home? It also, it kind of maybe catastrophize it a little bit. Of course, yes, it has to be announced in that way, but to a person who doesn't really have the understanding of what a repo rate and the effect on the property market, do you think that you guys now have to play a little bit of a better role in trying to communicate that to homeowners in the sense of home security or insecurity?
Probably, there's probably a bit of truth in that. I think origination has been in the market now for 25 years.
Mm.
I think we've played a significant role in getting the buyer and the seller more educated than they were probably 20, 30 years ago. So we're definitely at a better position than 25, 30 years ago before origination even came into the market.
Mm.
But it's a continuous process. So education in property, the value of property, how property creates wealth, how property gets you into the next property and maybe an investment property, I think is a continuous thing we can talk about and try and help buyers and sellers out there understand. I think every role player has got a part to play, real estate, the financial institutions, and then obviously origination like us. And I think we've done quite a lot of work in that, but it's a continuous process, and we will continue doing that.
And for those who are hearing it for the first time or maybe wanting a better understanding, what exactly is your position within the property market as
So
origination?
we Yeah, so we're very positive. Interest rates where they are now, they sort of at before COVID levels. The market is definitely picking up from what we can see. So there's a lot more activity, and the reduction in interest rate from 11.75 to where we are now at 10.25 has played a significant role in that. Again, bringing in first-time buyers into the market where they can now see that they can obviously afford to buy something. So although the quarter percent has not maybe made a massive difference in this reduction now, as I said, the 1.5% in total that it's come down in the last year, 18 months, that's the actual real change. And suddenly, your affordability goes up. So a month ago or a year ago, what you couldn't afford, now, there's a bit more affordability.
Colin, may I ask
So
that you
very
have,
positive.
yeah?
Yeah, no, so very positive outlook from our side.
And that's a great one. I want us to hold on that. There's a couple of follow-up questions that I have for you. It's time for us to take an ad break. It is 20 minutes after 2 p.m. Central African time. Let's take a quick break right here on the Upside.
Africa, meet Abedi.
Yeah, that's me.
Abedi is a music lover through and through.
I really, really love African music.
He's got a taste for all kinds of tunes and spends his days listening to Channel Africa. Guess what? He didn't know.
Okay.
Channel Africa wants to help Abedi and all music lovers everywhere to discover even more incredible music. That is why Channel Africa is calling on all African musicians to submit their music. Musicians, remember to give us all your relevant information. Make your submissions at music@channelafrica.co.za. Submissions are your chance to be heard on radio. But sadly, they do not guarantee that you'll be playlisted. All submissions will be carefully reviewed to see if they meet our station's requirement. Channel Africa, the African perspective. We take no sides, none whatsoever. We are the Upside.
It is 9 minutes to go before we find out what's happening in our sports and our econ, our money. But for now, also bringing it back to this conversation, we are joined on the line by Colin Strumpher, who is the regional manager at BetterBond. So let's talk about this, Colin. You were talking about we're doing better than ever. Do you think because of the buyer demand, now that we are doing better, now that it is positive, do you think the buyer demand is going to cause a house price increase? Do you think that people are going to now price their homes in a better position to kind of act on that demand?
I think there is that will happen. So there is a element of that will happen in certain markets, in certain provinces, perhaps. Here in the Western Cape, definitely property prices have still been increasing due to demand. So although interest rates have been reasonably high in the last 12 months, there has still been quite a high demand for property. But then again, that also brings in your investor who maybe wants to buy a rental property or property to rent out. So there's certain parts of the country where that's definitely going to play a part. We have found, though, again, to the education part, that there are more and more buyers that are more educated in terms of what property values should be and what they're also prepared to pay. So, there is still quite a big focus on, especially in the real estate sector, to make sure that if you're a seller, that the property is priced correct for the market, because the buyers are far more educated than they were years ago, and they've got an idea of what property is worth and what it should be worth, so they're also not going to overpay. It's a little bit of a tricky market. Yes, demand is going to push up the price, but buyers are also saying we're only prepared to pay so much.
What about those who are sitting in the rental market, the buy to let market? What does this mean for them?
Yeah, so again, because of the demand, there is still a demand for buy to let. So if you're a buyer in the investment sector and you want to buy to invest, and so buy to let, there's still a big demand for that. Again, with semigration that happens in the Western Cape, we're also finding that quite a number of buyers will come down to the various parts of the Western Cape and wherever they might be semigrating to, Garden Route and so forth, and perhaps they rent for a year or two before they decide where in those areas they actually want to live, and then buy. So still very, very good demand for that, and the market's still quite stimulated.
And what is currently the standpoint of the banks? Are their appetites, getting a little bit looser? And I'm asking this because I'm trying to establish whether it is a good time for the first time buyers. Is this like kind of our golden window for those who are saying, what, I'm taking the leap and I'm going to purchase my first property? Is this the right time? Do you think the banks are going to kind of let loose their appetite a little bit?
Yes, I think probably the last 6 months has probably been a good time to buy if you're first time buyer, because we are in a interest rate downward cycle. And speaking of that, interest rate should probably still go down a little bit more. So it's quite a favorable time to buy now. First time buyers have definitely increased in numbers over the last 6 to 9 months. Yeah, definitely. But I think by about 30%. So there is a recovery in that as well. So it's good to see the first time buyers back. High interest rates, 11.75, 11.5%, that held them back a little bit. It was just a bit too much.
And, anything that we can look forward to, expected repo trajectory for the next 6 to 12 months?
No, so, obviously we deal with and speak to a lot of economists as well. And the talk out there is that, we should probably be at about 10% interest rate now already, and maybe even for the last 3 to 4 months. So, although that didn't happen in September, we at least saw some reduction in that now. So considering that we should probably be at 10%, maybe even 9.75 for those who are a little bit more bullish. That does bode well for in the next 6 to 9 months, potential rate reductions of another quarter to a 0.5%. And then there's some economists out there that are very bullish and very strong-willed about this and believe we should actually be at around 9%. So, if we can get anywhere near single figures of 9.75, even 10, that will already look a lot better than where we are now and obviously where we were a year ago.
It's quite exciting because we also saw a decline in the unemployment rate. So there's more people employed. The interest rate is also working in our favor. We're going to see a lot more homeowners next year, I'm hoping. This is just a wish, We just hope that even the people that are getting employed are in a place where they can actually purchase a home.
Yeah, we hope so too. The property market is a stimulus for the market. It just unlocks so many aspects of the market in terms of buying and for municipalities, more rates and taxes. People living and buying near schools because they want their kids to go there, etc. So for us it's a market in the property sector that opens all the markets within our municipalities and obviously within our country.
100%. Colin, thank you so much for your time today. Is there anywhere we can find your organization and maybe get more information from you guys?
Yes, 100%. We are obviously, you can just Google us, betterbond.co.za. We are on the internet, we are on Facebook, we are on Instagram. You should be able to find us on all of those platforms.
Great stuff. It is Colin Strumpher there, who is the regional manager of BetterBond. Thank you, Colin. It is 12:27 Central African time. We can squeeze in a jam before we get to our sports and our econ. And also let me know, are you going to be one of the people buying houses next year, guys? +27634069126. I'm really hoping so. I'm praying that every person who got employed this year can actually do that for themselves next year. So keep your credit in good standing, and trust me, you're going to see Amawaza. It is 14:28 Central African time right here on the upside.